Hi, this is Leslie. Hope you're well with an update for you on the mother of all bubbles. And guys, it's not good news, I'm afraid. So let's get started. All right, guys. So in this video, I'm going to give you an update on the mother of all bubbles, the real estate market, the property market. And I'm going to talk to you a little bit about what's happening potentially right now in the UK housing market, the London property market, and also the US market later in the video as well. And as I'll explain to you in this video, it's some bad news and some good news, but it's mostly bad news, I'm afraid. All right, guys. So before we start, as I'm sure you know, well, we've started December. We're now officially in the Christmas season. So before we talk about all the bad news, let's cheer ourselves up a little bit by listening to some music. Here we go.
You a Merry Christmas. We wish you a Merry Christmas and a Happy New Year. A Happy New Year. We wish you a Merry Christmas and a Happy New Year.
Excellent. Okay, guys. So that was, of course, G4, who I visited in a concert about a couple of years ago. Anyway, all right, guys. As we officially now enter the Christmas season, many of you have been asking me, can I give an update on the property market, the mother of all bubbles? Now, as I'm sure you know, the reason why we call it mother of all bubbles, because a few years ago I talked about this in the fact that, according to some research, we found that several cities around the world have been in massive bubbles, property markets going through the roof. And London was one of them. We'll talk about the US market a little bit later in the video as well. So the London property market just skyrocketed. And by the way, in this video, I'm going to show you what this means, this particular chart, the wave counts in the property market in this video later. Now, before we look at the actual property prices, the chart of the property prices, what I'd like to do is to show you the charts of the leading, is one of the leading indicators for where the property market is likely going. And that's the chart of the real estate agent, one of the major real estate agents in London, in the UK, and that is Savills, which we'll take a look at in a few minutes. Again, two of the biggest real estate agents in the UK are Savills and Foxtons. You may have heard of them. And I would say this, if you live in other countries like in America or Europe or Australia, what I would suggest is look at the chart of the major real estate agents, the major realtors in your own country as well. All right, guys, so again, I can't speak for those countries, but again, have a look at the trends, see what you see. Has the chart bottomed? Are we beginning an uptrend? And looking at Savills, which is one of the major realtors in the UK, we can see that it's actually formed a nice bottoming formation. We've actually began an uptrend, but it looks, we have actually made a higher low here. You can see on the charts during the last few months. It looks like that Savills is on the charts formed a potential bottom here and a higher low. We haven't broken resistance, by the way, the 1,000 level. That 1,000 level on Savills was going to be my major resistance level. We have not yet closed above it. We haven't broken above it to the extent I would like to see that. And until we see that, I'm going to remain cautious. But it does look like we're seeing an uptrend here in Savills. So if we break that 1,000 level on that chart, that's going to signify we're potentially beginning a major uptrend to the upside in Savills and potentially in property prices. And by the way, in case you're wondering why am I looking at Savills, because this has been a very good leading indicator in the past as well. The chart of Savills correctly predicted the top in 2007 and the crash and the bottom in 2009 as well. So that's why I look at this chart. Another chart I'm looking at here is Foxtons. Foxtons is another major real estate agent. So again, this is also showing to us a potential bottoming formation, sort of an uptrend. So this is also looking pretty good as well, the beginning of a swing to the upside here on Foxtons. Anyway, so these charts are actually looking quite bullish, provided Savills can actually break the 1,000 level as well. Now, let's take a look at this chart here on actual London property prices. This chart is courtesy of Land Registry, and you can see over here that in the last 20 years, I'm looking at 20 years of data, and this is all I could get, by the way, as far as the charts goes for the last 20 years. And you can see I have this, the first wave, the first major bull rally in property prices to 2007. I had that as a wave 3 with a wave 4 correction. Okay, we have a wave 4 correction, which was the crash in 2008 and the bottom in 2009. And then we had a major uptrend. We started a major uptrend, a potential wave 5, which is taking us to where we're at potentially right now. By the way, in that major wave 5, the bigger wave 5 shown in blue, we also have minor trends with the minor waves, the smaller waves. So I think we actually formed a 1, 2, 3, an uptrend, a wave 3 uptrend to 2017 from the top there, then a wave 4 correction, an ABC wave 4 correction you can see right there, which took us to the lows in 2019 last year, which by the way is not surprising. The Brexit uncertainties, the uncertainty around Brexit put downward pressure on the property prices in London and the UK, and that formed an ABC pattern you can see there on the wave 4. Now I have to tell you, What I'm surprised about is I actually was expecting the wave 4 to go deeper, much lower. If you saw my previous video update, I was expecting the correction, the corrective move to continue moving lower. So this is one prediction I did not get right, which is, again, disappointing because I was expecting this recession, the current economic climate we're in right now. I was expecting this recession to take wave 4 a bit more deeper, lower. But the opposite has happened. In fact, you can see that London property price has been rising, and they've actually taken out the highs of 2017. So this tells me that likely, on the balance of probabilities, wave 4, the correction on London property prices, has likely bottomed. It's completed. And this could be the start of wave 5, pushing us further higher. That actually makes some sense. And I know some of you are probably thinking, no, this can't be right, because look, we've got massive unemployment right now. Again, the economy is still in bad shape right now. And yes, the COVID situation hasn't actually improved just yet. But you have to remember, guys, that the markets are forward-looking. The markets are always leading ahead of the economy. The economy is the one that's lagging behind. Always, the economy usually lags behind the market. So it's not surprising that the stock markets have been bullish. It's not surprising the housing market looking bullish either, because remember, these market prices are forward-looking. They're looking at 6 to 12 months ahead from now. So it's not surprising why these markets are going up, because remember, it's likely that investors and market participants are pricing in future returns. And they're seeing what's happening right now. Well, for one thing, as I'm sure you heard the good news about the vaccine, a vaccine will be released in the UK and the US pretty soon. And it's likely that investors are thinking, well, if the vaccine is coming out, well, that could be good news for next year. That means more and more people become vaccinated against COVID, coronavirus, and that hopefully will mean that fewer infections will occur in the future. And that could actually help the economy get back on its feet as well. So it's not surprising, therefore, the market prices are pushing ahead, looking quite bullish, ahead of the economy. The economy looks still pretty bad right now. Massive unemployment. But the bottom line is market prices are forward-looking. This is leading ahead of the economy. And I'm gonna go with the charts. As I'm sure you know by now, I'm a technicals person. Doesn't matter what the fundamentals are. The fundamentals are always in bad shape anyway, usually in around the market bottom. If you cast your mind back in 2009, we had a similar situation. Massive unemployment, the economy is in bad shape, lots of bankruptcies and all that was happening. And yet the stock market went up and the housing market pretty much bottomed out around about 2009, 2010 onwards. Anyways, the bottom line is, guys, on the balance of probabilities, it's looking likely, this chart is telling us, we're starting a major wave 5 towards higher prices. Again, this is not something I would have liked to have said to you guys. This is not something I would have liked to have seen. I would have liked to have seen lower prices, especially given the recession. But again, it looks like the market's not going to give it to us. And given the fact this recent rally in housing prices has taken out the wave 3 highs, this tells me that potentially we're heading higher in the next couple of years. By the way, one more chart I want to show you here as well, which is quite important. Look at this chart of the percentage change, the percentage yearly change, as you can see here. And notice that in this particular chart tells you that just recently we went above zero. We dipped below zero recently. In 2019, we're below zero. Now in 2020, we're above zero. The last time this occurred, this chart was below zero, was in 2008. And then it went back above zero was in 2009. And that was the start of a major bull market in the housing market as well. So this is actually quite bullish. The fact that this chart's gone below zero, now it's above zero, quite a bullish chart in my view as far as property market is concerned. So this means, guys, that I'm likely to take some risks next year in 2021, potentially in January, February. And yes, I might start to put my feet into the water and, maybe perhaps buy at least one property next year, again, as a long-term investment. When I say long-term, let me just make sure I mention this. I mean the next 4 years. Again, I'm not looking to hold this for too long. I'm actually looking to sell, if I buy next year, if I buy in 2021, I'm looking to sell it in the year 2024, because I think in the year 2024, a bigger recession could actually occur that year. And I'll discuss that in a separate video with you, again, as there'll be a separate video in the near future. But again, if what I'm seeing here on the chart is correct, and again, this could be wrong, okay? So we're not saying this is 100% correct, but again, it's looking probable or quite likely that, again, given what I'm seeing on Foxton and Savills and this chart over here on the land registry, it tells me that it's potentially likely that the corrective wave 4 has likely bottomed, and we could be seeing the next major wave 5 in house prices in London for the next couple of years, potentially by the year 2024. And again, I'm looking to be bullish for the next few years. By the way, this actually makes sense too, because the stock market also is looking quite bullish as well. I'm actually bullish for the stock market for next year as well. So if the stock market is going to be bullish, then I don't see any reason why the housing market could be bearish, because housing markets and stock market prices usually are correlated positively and they go in tandem. All right, guys. Now, of course, we have to remember there's always a risk this could be completely wrong. So I'm just saying personally, I'm willing to take some risks next year and perhaps buy one property in London and see how it goes. And again, just to be clear, I'm not trying to say to you should buy property next year as well. This is a decision I'm making for myself personally based on what I'm seeing on the charts and based on the risks. I'm not saying there are no risks. There are definitely risks involved. And of course, you want to make sure you do your homework and make sure that if you're going to buy a property next year, that you look at all the risks involved and you hedge against those risks as much as you can. Now, there's one more thing I want to mention here is quite important. According to many of the estate agents, many real estate agents I've spoken to, they're saying to me because of the COVID situation, the COVID crisis, that tenants' appetite for what kind of property they're looking for has changed. So what tenants are looking for right now as the kind of flat or a house they want to live in has changed over the last 12 months. So it seems, according to some estate agents, what they're saying to me is that tenants are now looking for space. Again, because of the lockdowns, and in case we get some lockdowns in the near future, tenants are now looking for a property to live in, provided it has two things at the very minimum, which is firstly garden access. So you want to make sure if you're looking to buy a property for letting out to a tenant, that the property, that the house or flat has garden access. Very important. Tenants are now looking for garden access for obvious reasons. The second thing is lots of space in the actual property. So again, you want to make sure at least you have 1 or 2 bedrooms. I was actually originally looking for a 1-bedroom flat to buy, but now I'm looking for a 2-bedroom flat, again, for obvious reasons, because it seems that if couples are going to move in to that property, those couples want their own space. Again, if there's a lockdown in the near future, again, who knows, it might happen, then couples want to have more space to themselves. So perhaps a 2-bedroom property may be more advantageous, again, in terms of value and all that. But again, 1-bedrooms are okay too, provided there's lots of space. Again, real estate agents are telling me that you need to have lots of space in the lounge and in the bedroom as well, if it's a 1-bed, for example, as far as the London property market is concerned. Now, before we finish the video, I just want to mention the US market. I got to tell you guys that looking at this chart of the US real estate ETF or IYR, this chart doesn't fill me with a lot of confidence. I'm not quite sure if I feel confident enough to say that this is an uptrend. This still could be a corrective rally because you could make out perhaps as a 5 waves, but it doesn't look to me like a convincing 5-wave move up. To me, this still looks a bit shaky. But look, I will say this: it could be the start of an uptrend as long as we remain above that 75 region. As long as this chart IYR, the US real estate ETF, as long as it remains about the 75 level, I can maintain a bullish bias as far as this chart is concerned for the US real estate market. But I got to tell you, I'm not very confident right now about this chart or the US real estate market. So it perhaps might be a good idea to actually consult real estate agents in your own area, wherever you live in the US as well. I would say the same thing also in the UK as well. So one more thing I want to mention, guys, that despite everything I just said in this video, what really matters when it comes to property markets, real estate markets, is location. Location is everything, because obviously, as I'm sure you know, where you decide to buy matters a lot. What kind of property you're looking to buy matters, and what kind of strategy you're applying. Who are your tenants going to be? Are they going to be professionals working in the city, or are they going to be family people? They're going to be couples, for example. So it matters a lot who your tenants are going to be and the location. So make sure, again, you do your homework. Make sure you do your research on property markets, and again, also consult your real estate agent as well for more information about the property and the location as well. So guys, in a nutshell, it seems on the balance of probabilities, given what we're seeing here on this chart of the London property market, it seems the London property market could be in good shape for the next few years, perhaps, again, probably for the next couple of years at least. So it looks pretty good, or as Larry David would say, pretty good. Pretty good. Thanks very much indeed. I look forward to seeing you in the next video update. Cheers, guys. Bye now.